Renaissance's IPO ETF, while it's down 50% from the highs, is up 17% over the past month. Take a look at Affirm, Robinhood, that was our mystery chart, Warby Parker, Unity Software. They're all down more than 70% from the all-time highs, but they've also climbed at least 30% over the past 4 weeks. So should you chase them or not? Let's ask Jeff Kilburg. He's Sanctuary Wealth CIO and a CNBC contributor. Jeff, it's good to have you. And we'll just kind of walk through these one by one. Let's start with Affirm, which is up 71% over the past month.
No doubt, Kelly. It's amazing to see Affirm. I'm actually a user of Affirm because they work with Peloton, and Peloton holds a lot of my dry cleaning. I don't really use the Peloton, but Affirm at the end of the day has taken just a dramatic haircut, Kelly. It was a $47 billion valuation. Now it's down to $11 billion. But you're right. You are seeing a little bit of investor gravitation here. This IPO is at $49. So when you talk about the ability for this modern layaway, this is truly the modern layaway. You can buy now and pay later. So that's what Affirm has to do. So I think they're getting excited. Their CEO talked about the fact when we actually do see a recession, whatever year that recession may come, Kelly, you'll see the value of Affirm as it really is this modern day version of layaway.
So this is a buy for you. I should note 3 of these are a buy for you. 1 is a sell. So you are constructive on some of these IPOs that I think a lot of people have kind of lumped out as a category.
Yes, and Kelly, I'd be clear, this is a trade. This is a trade opportunity. This is not a long-term investment. But some of these names, as they're so beaten up, there is opportunity for that longer-term hold. So this trade is a little bit longer-term in nature.
All right, you like Warby Parker, too? It's up 36% over the past month.
I do, and Warby Parker is interesting. I'm actually a user. I have a couple different glasses from them. I really like the client experience. They have a tremendous client experience, but yes, it's in oversold conditions, but it does have a little bit of nervousness. When you talked about the last messaging from their CEO was that they're very concerned about the uncertain macro environment. Obviously, that's shared across the S&P 500, but I think there's an opportunity to buy Warby Parker. So, yes, this is a buy as well, Kelly.
All right, Affirm and Warby. What about Unity Software? This one's a little bit more of a contentious stock. There are headlines now about them rejecting AppLovin's buyout offer. The shares are down about 7% today. Why do you like it?
You know, Unity is really interesting. Ticker U. This is actually $2 above its IPO. It's up about 47% in the last month, but to your point, Kelly, it's still down 61%. And I would preface that Unity feels like my wife as well as you, Kelly, the prettiest girl in the room right now. So they're getting all kinds of offers. They had to reject the recent proposal from AppLovin, and this is all in the wake of the Apple privacy issues. So I think you have to consider that, yes, the 52-week high is $210. Yes, we're a long way away from that, but this is a really interesting story as we're really trying to navigate and understand the metaverse. This is actually a great point that you saw Facebook warn in the wake of those Apple privacy issue changes. They warned about $10 billion coming out of their bottom line, and it absolutely happened. So I think Unity is actually really positioned quite well. If you use the analogy about building a house, you need Unity. And it's not just gaming here, Kelly. This is there's a creative content play. And now that they're really going to take in IronSource, that $4.4 billion merger that they're already playing on, I think there's a potential for a bigger piece of the puzzle down the road. And remember, Unity is actually bigger than AppLovin from a market cap perspective. So I want to be a buyer here, and I think this is a much longer hold as we really figure out what this metaverse actually shakes out for the rest of 2022 as well as 2023.
Yeah, it's a helpful explanation because it's one of those companies I watch going, I know they're up to something. I mean, can't quite always figure out what it is, but Unity is a buy for you. So let's move on to the name that you're not as attracted to here, which is Robinhood. I mean, this was a terrible 2021, terrible start to the first year. It has found some traction lately, though. Why are you staying away?
Kelly, when I first came on CNBC talking about this IPO for Robinhood, I was a seller then. It's a flawed business model. 80% of their revenue is predicated on them selling their order flow. So I know it's commission-free. I know it doesn't cost anything to trade on it. But the fact of the matter that they have an 80% model predicated on collecting order flow monies, I think that goes away. The SEC is trying to crack down that to a certain extent, be more considered. But I think when you talk about Robinhood, the lack of profitability, look at Bank of America. They said they're not going to be profitable until 2025. So I didn't like it at the IPO up at $39. I'm surprised it's actually in double digits right now. I want to stay away from Robinhood. Sell, sell, sell.
I guess to put it differently, even if you thought that business model could stay intact, they're still not making money on it.
You know, that's a great point. Maybe I don't like that business model. That's more of a personal view. You're absolutely right. But I think the longevity and the efficacy of that model, they're not diversified. If they got more diversified, I could change my mind. But right here, right now, being 80% leaning upon revenue, all off of order flow selling, that doesn't work and it doesn't add up to me, Kelly.
That's why they call you the killer. Jeff, thanks so much. Good to see you today.
Thank you, Kelly.
Jeff Kilburg.
Shepard Smith here. Thanks for watching CNBC on YouTube.